Thank you all so much for joining us today for this webinar. We're going to be talking about credit savvy for financial well-being in the U.S. My name is Milady Garcia, and I am joined by our guest speaker, Donna O'Connor from HopeLink. We're going to do formal introductions here in a minute, but I would love it if you guys could tell me your names in the chat and where you're joining us from. Now, this is a webinar series, and it is a collaboration between the Migrant Education Program and the Financial Education Public-Private Partnership, otherwise known as FEP. And for this webinar today, we are going to be, my hope is that you guys leave the webinar feeling that you're capable of explaining the basics of credits to the youth that you serve. You can identify factors and help the youth identify factors affecting credit scores, which is such an important thing to establish financial well-being in the US, and help them develop strategies for building and maintaining good credit in America. So I'm going to go ahead and introduce myself. Thank you, Felipe, for doing that. I encourage other participants to continue to introduce yourselves in the chat. Thank you so much, Maria. Thank you, Tanya. As I said earlier, I am Milady Garcia, and I am the Special Populations Program Supervisor for FEP. Basically, what that means is that in my role, I support financial education for students that face barriers and have to go through hurdles to access education and educational resources that all other students access with ease. And traditionally, these are our most underserved, marginalized, disadvantaged students. I myself empathize because when I came to this country from the Dominican Republic, I spoke no English. My family was extremely asset limited. We were completely unbanked, and we faced a lot of hurdles, absolutely. So I do it with love and passion. I serve my community with a great understanding of what those challenges that they face are. My education background is in early childhood special education, early childhood general education, as well as Spanish literature with a focus in Latin American studies. And prior to working with FEP, I worked as an interpreter and translator. And I don't know about you guys, but information on credit would have been so helpful when I was a broke college student and got that first credit card application. I made mistakes, let me tell you. But that's a little bit about me. I want to tell you a little bit about FEP. We are, again, the Financial Education Public-Private Partnership, and we are an education board created by legislature to bring together public and private stakeholders to promote and improve financial education for Washington K-12 students. Now, our approach is basically to promote financial education by preparing educators and education professionals such as yourself with professional opportunities such as, these trainings and webinars that we have to increase their confidence in talking about finances with the community members that you serve and teaching it in the classroom. But we also go a step further and we vet financial education instructional material to make sure that it meets financial education learning standards and that it is free of implicit and explicit bias. So that's a little bit about me and a little bit about FEP. And I'm going to turn it over to my guest speaker. Thanks again for being with us, Donna.
Thank you so much. It's great to be here, and it's great to see everyone from all across Washington. Very quickly, introduction, Donna O'Connor. I manage the Financial Capability Program at HopeLink, and I'll share a little bit more about HopeLink in a second. I'm also a financial coaching counselor, so I get to work both on a program level and kind of figuring out what does the community need and how can we address those needs, and I also get to work with clients on a day-to-day basis. Coaching, and I also do a lot of financial education. I'm very passionate about this work. While HopeLink does not serve exclusively folks who identify as immigrant or refugee, about 49% of our clients are immigrants and refugees. So it's a huge part of our population. It's also a very special population for me. I was a Peace Corps volunteer for many years, and I experienced what it was like to live in a country without any language skills and trying to understand and express myself. And I have a great deal of empathy for folks who, somebody else is a Peace Corps volunteer, who are in that situation here, especially as they're trying to learn our very complicated financial systems. So this is really important work for me. I have over 35 years of experience in financial services. The last 10 years I've been here at HopeLink, and I have to say this is what I've always wanted to do. So I feel like I've landed in a place of it's kind of where I belong and where I thrive. So I'm delighted to be here, and yeah, I'm going to share a little bit more about HopeLink for those of you who don't know who we are. And as I'm looking down the list of everybody where you're from, I'm really excited because you're kind of outside of where HopeLink's normal service area is. So we are a community action agency. We provide lots of different programs, 9 different programs, but we serve the North and East King County region. So if you're outside of North and East King County, I'm going to drop a link in the chat for you, which is basically where you can find your local community action agency. Because all across the state, we have, I think it's 33 different community action agencies that are providing services to support folks in the community. So I'm going to drop that in the chat right now. And you can look and just see, I think you can just do it by zip code or county, and up will pop who the local community action agency is in your community. And you may already be familiar with who they are. But anyway, so HopeLink is the community action agency, like I said, serving North and East King County. We have a variety of programs that are meant to provide support to folks kind of along this continuum of, maybe when they're in crisis and needing basic needs support, all the way through equipping them to exit poverty. So we are in our program, the financial capability program, we're able to engage with clients at all different parts of their journey. So we work a lot with folks who are unhoused, who are moving into shelter or permanent supported housing, all the way through finding employment and, like I said, equipping themselves to exit poverty for good. So that's just a little bit about our organization. And again, the link is in the chat so that you can connect with your local community action agency as well.
Thank you so much for that, Donna. We're going to keep going here. And I just want to do a quick webinar recap of our previous webinar in which we discussed the importance of being banked for financial success. And very briefly, one of the reasons why we want to make sure that our youth, especially those that are already working, have an account with a financial institution, either a bank or credit union, is that it's a place to keep our money safe. A lot of our youth are moving around a lot. It is not safe to keep money at home, especially if you're doubled up with other families. And up to $250,000 of your money that you have in a financial institution account is insured. So the bank could flood, it could burn, it could fail. Your money's going to be safe. The other important reason is that having an account with a financial institution also can give us access to free financial tools and services. They often have workshops and classes. You can sit down with a bank representative or a credit union representative and go over your financial plans, and they can equip you with tools and guidance to how to achieve your financial goals. It's also cost effective to have an account with a financial institution, especially when compared to alternative banking services. If you're paying money to cash a check, if you are paying money to buy money orders to pay your bills, that is something that about $20,000 can be saved if you, instead of accessing those alternative financial services, do so through financial institutions, through direct deposit. You get free checks with financial institutions as well. And these are just some of the ways that you can save money. If you want to see, we actually recorded that previous webinar as well. You can go to FEPP.org, that's FEPPP.org, and access under professional development and trainings our previous recordings of the webinar series that we have today. And of course, overall, we want to achieve our financial goals, and having access to financial services definitely helps us do that. Now, I want to move on to a nice little activity. This is true or false credit edition, and I encourage you guys to please put your answers in the chat. This is meant to get kind of like our financial juices flowing and start thinking about the topic that we're discussing today. So the first statement here is an individual's race or nationality is factored by credit bureaus when calculating credit score. So does race impact your credit score? Do the 3 major credit bureaus, take that into account? Please put your answers in the chat. True or false? So we have false, false, false. Oh, this is a very savvy group here. I love it. You're absolutely right. So credit bureaus do not factor race when calculating credit score. Now, this is the interesting fact. Um, Data shows that minorities generally have lower credit scores than white individuals. So we have something called the Credit Opportunity Act that prohibits lenders from considering race when making lending decisions, but minorities still face a lot of hurdles to access the same financial services and opportunities that can help an individual build credit and access financial education to make savvy credit decisions. So again, it's almost like yes and or yes but. Now, the second statement here, again, true or false. Age is a factor taken into account when credit bureaus calculate scores. And that's, of course, credit scores. Is age a factor? Let's use the chat to put our answers. Okay, we have a guess, very educated guess, some true, most false. Okay, the answer is false again. Age is not a factor considered by credit bureaus when calculating credit scores. However, data shows that younger individuals tend to have lower credit scores. And one of the reasons why, again, is that they may not be using credit. And if they do use credit, they may not use credit as wisely. They may be like me. I made some mistakes when I was younger and did not understand the financial system. So if our youth are recently arrived, if their parents have not joined the financial system in the United States, they're probably going to have a lower credit scores as well. The last question in the true or false credit edition, is income considered when calculating credit scores? True or false? Income. Oh, we have a lot of true here. Not a lot, a couple. False. More true than false, or actually, it's actually equal. I like that. It's split down the middle. So this is false as well. Income is not a factor considered by credit bureaus when calculating credit scores. But again, data shows that lower income individuals tend to have lower credit scores. And I would love to hear at this point from you, Donna, why do you think that is? That even though it's not supposed to be a factor when it comes to calculating credit scores, usually people who have lower incomes also have lower credit scores.
Yes, it's a great question. And I think the reason that we can point to is that um, typically folks who are in a lower income kind of bracket, they do not benefit from the way the credit system is already set up. Our credit system is set up to benefit folks who have resources. So, for example, if you have a home and you have a mortgage, right, that information is going to be reported to a credit bureau because that's what they do. If you're renting, that information does not get reported to a credit bureau, even though you may be paying your rent on time every single month, right? And so a lot of the system that's kind of holding up our calculating these scores is skewed toward people who have resources as opposed to those who do not.
Thank you so much for that, Donna. And Tanya made a comment. She gets people with lower income also have more debt. And that's also true. An inability to repay debt on time if you're asset constrained or asset limited is another important factor. Thank you so much for participating in this nice activity. Now, I want us to do something a little more personal. I want us to think back to what our first experience with credit was and how did it make us feel? Was it positive? Was it negative? Were we able to, did we have all the information we needed to make an educated decision? Were we able to rely on adults around us to make that credit decision? I remember for me, and please use the chat if you want to share a personal anecdote. I will share one with you. I remember very clearly being in college, again, broke college student. Um, I was working. I got my first credit card application. I had a social security number, so I went ahead and I applied and I got approved. And I had a credit line of $1,000 and I thought I was adulting. I was like, yep, this is it. I'm an adult now. I have credit. I went to H&M and bought a shirt for about $12. And this is how much this scarred me. I have a lot of details because this was an unpleasant experience. I paid $12 for that shirt, but I had never had a credit card. As I shared with you earlier, my family was unbanked. My parents didn't have credit either. Nobody said, "Hey, remember you have to pay that back on time, otherwise it's gonna accrue interest." So I did not pay it back on time. I received a letter in the mail from my credit card company saying that I now owed the $12 and $28 in interest for my $12 shirt. And I was horrified because that was all of my transportation money for the week. At the time, I did not know that I could have called the credit card company and said, please, excuse me, this is the first time I'm doing this. I have the money. Let me pay right now. And that probably would have been taken away the interest rates. I paid it, and then I did something even worse potentially. I closed the credit card right away. I was so risk adverse that I said, I'm not doing this. I'm not ready. I'm not participating. And it was about a year later that I again received a credit card application. And I went ahead and opened a credit card because I had gotten more information. I felt like I understood better. I have not been late in for a payment since. It was a hard lesson to learn. So I encourage you guys, if you want to share it, Donna, I think that you probably had a story that you wanted to share either about yourself, family, or clients that you've had.
Absolutely. And I had a very similar my first experience with credit to yours, Milady, but I wanted to share an experience that is kind of on the other end of this, and that was my mom. So my mother, both my parents have passed away, but when my dad passed away, my mom, what we realized is, she was in her 70s. She had never had any credit on her own. All of the credit was built around my dad. It was his credit cards. It was, and generationally, I suppose that's what they did, right? But what we discovered was after my dad passed away, my mom had almost zero ability to start building her credit at that age. She had nothing that she could show for that. And it really put her in a negative place. And so, one of the things that when we're talking with clients, yes, getting started on building credit right away is really important. It's also very important to build your own. So, if people are in a relationship and they're relying on one person's credit, that is not always the best way to approach it. So, always try to build your own. And that way, you never find yourself in that situation where, you're not able to because someone else has been carrying the credit for the family.
Thank you so much for sharing. Yeah, it's something that definitely happens. We want to sometimes not have to make those decisions and kind of take it easier by, kind of joining somebody else's on credit, or if we don't have a positive credit score, somebody may say, "Oh, I'll put you as a cosigner on my credit," and their credit tanks, and we're an even worse off than we were at the beginning. We have two participants that shared in the chat. I want to take a moment to thank you guys. Vanessa says, when I got my first credit card, my mom was really hard on me about making payments on time, and I always tried to pay it off sooner before the deadline. At the time, she mentioned credit, but I didn't know exactly what it all entailed. And that's kind of how I was. Like, I kind of got some idea from commercials, but I didn't understand the nitty gritty, right? And then Armando, thank you so much. He shared I had a bank close a credit account without my consent. I only found out when my score dipped quite a bit and had no idea. And that's unfortunate. And that's kind of like how things work at times when people kind of make these decisions and don't let us know. And it's also important, and we're going to be talking about this a little later on in the webinar, to check our credit report because we can kind of find out what's going on behind the scenes that people are not disclosing because they have a right to not tell us anything. They can change an interest rate in a credit card without really telling us. They just go ahead and do it. And either we keep it or we don't. Now, I want to talk about our community members that are recently arrived that may not have a social security number or an individual taxpayer ID number to access secure credit cards, and what they do to access credit, because they do, right? So we have tandas in Mexico and Central America. I think they're called tandas, right? In my country, they're called sociedad. And for those of you who may not know what it is when a group of individuals kind of get together. These are people who are responsible, they know they're all employed, and they pull their resources together for a certain amount of time and kind of pick numbers to say, okay, you're going to get the 10,000 this week, next week I'm going to get it, and they have to keep paying basically $1,000 for 10 weeks so that they all get a turn at having those $10,000. That's one of the ways that people have been doing it, I know, for ages. But it does pose risk because individuals can lose their jobs. They can face an unforeseen emergency where they can no longer make that payment. And if you already paid your 1,000, you're not going to get the same amount back, right? The other thing that people traditionally do is just ask family members or friends for loans. And again, there's a risk because you don't want to be seen as the person that's always asking for money. And if something happens to you and you can't pay back, then that kind of creates a little bit of friction in that relationship. One option that does not involve credit is dipping into your savings. You work hard, you save money, you're risk adverse like I was, and I can, full disclosure, I continue to be, but now I feel like I have a better handle on credit, so I do utilize it wisely. But when people use their savings to access the services or the tools that they're needing, they deplete their savings. And if something were to happen to them, if they were to need a medical emergency, if they lose their employment, if their car breaks down, all of these other things that can happen, then they're in an even worse situation than they were before because they don't have the savings and they have an established credit line. And the whole point of this conversation, or at least partially greatly, is for people to have access to a credit line so that if something were to happen and they need to use those funds, they can without depleting their personal savings if they have that. Okay, Vanessa has in the chat another thing that there is different kinds of credit as well, which can also affect you when purchasing big purchase such as a car or a home or even rent. Absolutely, Vanessa. Thank you so much. I see you're all participating in the chat and I greatly appreciate it. Now, how do we talk about this? Like, what is credit and how does it work, right? So, credit basically represents, in many ways, our financial reputation. It represents our ability to borrow, right? Um, One of the things that I like to tell people is having credit helps you access goods and services now and pay for them later. And if you have the money for it, yeah, you can pay for it right away, but you're not establishing a credit history. And in the United States, in order to access long-term wealth building tools like a home, you may need to access credit at some point, right? So one of the things that having credit does is it creates that record of borrowing and payment history, which is your line of credit and your credit history. It enables you to access funds for asset building and not only for a home, but for a lot of people who don't have enough savings to buy a car to get to and from work. If you want to start your own business, a small business, and you need $10,000 to get started, you may be able to access credit either from a credit card or from a lending institution, a financial institution, to get that business off the ground. One thing that I do want to talk about here is there is special consideration when we're talking to our out-of-school youth and students in the migratory program. Not all of them were born outside of the United States, but some were, which means that some may not have a social security number. Traditionally, to access credit cards, you do need a social security number. Now, if you have an individual taxpayer identification number, you're able to access a secure credit card to some financial institutions that do offer that. And that can also help you establish a credit history so that you can then access credit and continue to build and increase your credit. But there is risk to consider. I want to show a video from the Federal Trade Commission. This is their financial education resource called consumer.gov. I have presented on this resource in the past. Their resources I like because they explain financial education concepts very simply and in a way that is very easy to understand. And they are all available in English and in Spanish. So this is a very brief video that kind of explains how credit cards work. Please let me know with a thumbs up if you're able to hear the video. Okay. On the hottest day of the year, Marta's air conditioner broke. Are you able to hear the video? Awesome. Thank you so much.
So she went to the store to buy a new air conditioner. Marta didn't have enough cash, so she used her credit card. The air conditioner cost $300. That evening, her family was cool and happy. The next month, Marta got her credit card bill for the $300 air conditioner. Marta had it in her budget to pay $15 each month until she finished paying for the air conditioner. $15 was her minimum payment. Then, every month, Marta sent the minimum payment. But Marta's balance didn't go down $15 each month. The credit card company added interest to her balance every month. The annual interest rate on Marta's credit card was 23%. So the credit card company added interest to Marta's balance every month. It took Marta more than 2 years to pay for the air conditioner because she paid only the minimum payment. At the end of 2 years, Marta had paid $382, $300 for the air conditioner, and $82 in interest.
So that just goes to show how quickly we can start accruing interest if we start and make only the minimum payment. And we can budget and have, our budget set up. We talked about budget in our first webinar, but it is so important when we're talking about paying back loans and credit card payments that we discuss the fact that we do not ever want to make just a minimum payment. If we can afford to pay more, always pay in full. And this is our tips and tricks for using credit cards to build credit. You want to pay on time and you want to pay in full as much as you can whenever you can. At least pay more than the minimum payment. Avoid using more than 30% of your line of credit. So that means if you have a credit card for $1,000, don't put more than $300 on that credit card and pay it off before you start using it again, because that will lower, usually using more than 30% of your credit line at a time does lower your credit score. Avoid applying for more than one credit card within a 6-month period, because this can also lower your credit score. And Donna O'Connor is going to talk to us about paying for medical bills with credit cards. She actually told me about that. And this is a really important piece of information that I think all of us need to know.
Great. But before I do that, I want to just elaborate, if I may, on
Please.
the 30%. So this is a really important piece. Like, even if you're paying this is probably the single most impactful thing, calculating your credit score. So trying to stay under that 30%, sometimes we go over 30%, right? Because we have a large purchase, and that's okay. What I usually recommend with my clients is that if you're over that 30%, it's okay to pay it down prior to the due date. You can make multiple payments to your credit card throughout the month. And so it's okay to do that to kind of keep that balance below that 30%. And then, so for the medical bills, I wanted to really just share this information because a lot of people don't know this, but there are a lot of consumer protections around medical debt and medical bills, and there's also a lot of opportunities. So if someone has a fairly large kind of medical bill that they end up with after insurance or what have you, or even if they don't have insurance, most hospitals have what they call charity care or financial assistance programs, and we are always encouraging folks to apply for that and get relief. Or if you're at a doctor's office, or they can enter into some sort of payment plan, we really would encourage people to do that, because once someone takes medical debt, let's say you have $1,000 residual bill from I don't know, an emergency or a hospital bill. Once you pay that with your credit card, it is no longer considered medical debt. It has taken it out from that protection, and now it's just unsecured debt, as if you had bought a TV, right? So we want to try to keep medical debt in its own world. And there is a lot of changes happening. Credit reports, as of today, no longer report medical collection debt that's $500 or less. And it also takes 12 months for any medical debt to get onto a credit report. That's the way it is today. The Consumer Financial Protection Bureau just issued a rule back in, earlier this month, that they are trying to get all medical debt removed from everybody's credit reports, which is huge and significant. I do have to say, though, as of this morning, there is a challenge to that rule. That may not be a big surprise, but two Texas courts are right now looking at that. So there's a hold on that. But if all goes well, by the end of this year, hopefully, all medical debt will be off of credit reports, which is very huge.
Thank you so much for sharing that. Yeah, as Donna mentioned, I had no idea. And this is something that a lot of people probably do, not knowing how it could impact them in the future. Just kind of, okay, I have this medical debt. Let me just use my credit card. But it kind of takes out of consideration so many other services that you could apply for to help you mitigate that cost are no longer an option just by using your credit card to pay for things. Thank you for sharing that, Donna. Now, I want to talk to you about credit reports and especially in consideration to our out-of-school youth and our migratory youth that experience higher mobility rates and often live doubled up with either other families that they're related to and individuals that they may not be related to. Basically, a credit report is a summary of your credit history, including the types of credit accounts you've had, your payment history, and certain other information such as your credit limit. There are three major credit bureaus that have credit reports. There are other credit bureaus, but these are the three major ones: TransUnion, Equifax, and Experian. And again, this has a record of your borrowing and payment history. But there's also other information on your credit report, such as your address, your social security number, your date of birth, your employment history can also be on there, not just your payment history. It's important, I find, for our students that are experiencing higher mobility rates and who are often in situations where they don't have access to like their own space where they can keep things safe. It's important for them to know how to dispute errors in their credit report and the fact that they can even access a credit report. When you have a student that is moving around a lot and other people have access to their information, that increases the possibility that their identity will be stolen. If they're not checking their credit report because they're thinking, well, I don't even have a credit card, that doesn't mean that someone else did not take your information to open a credit card under your name. And they're not going to be responsible with it. They're not going to be making payments on time. They're just going to continue to accrue debt in your name. You're innocent. You have no idea that this is going on. But this is why I stress the importance of having our students check their credit report as frequently as they can, as early as they can. Now, there are places you can go to credit report. Is it .com or .org? Donna, do you know? Credit report. Let me see here because I have
It's
it.
annualcreditreport.com, and I can drop that
Thank
in the
you.
chat. Mm-hmm.
Thank you so much, Donna. I appreciate it. At annualcreditreport.com, you can go on there and get your free credit report from TransUnion, Equifax, and Experian. Again, all the information on your payment history, if there's any loans out in your name, will be there. You can dispute errors, right? When you move around so much, people make mistakes. There could be errors, and those errors could be harming your credit history and your credit score. So you want to make sure that you're able to dispute those errors. It's important to know you can get this free credit report from annualcreditreport.com online if you have a social security number. Now, if you don't have a social security number, you can obtain it either by phone or by mail. And I'm going to put that information also in the chat. This is the phone number you call if you want to access your credit report using your ITIN number, as we mentioned earlier. And you can also mail ask for your credit report by mail. And I don't have that information right now, but I can get it for you. Donna, do you have it?
I can get it. I'll pull it up and drop it in the chat.
Thank you so much. So those are the things that I want our participants to know to help our students, whether they have a social security or not, and their families too, as much as possible. Get your credit report and go over it together if because that can really be very eye-opening and kind of inform us of things that it may not have been necessarily an individual that you live with. It may be a bank, as we learned earlier, that can close accounts that were open in your name and not even tell you. So there's so many reasons why it's important to check our credit report and get comfortable with the process. These are things that can be really scary. Um, Especially if we're the first people in our family to do them. We want to make sure that our students know this is safe, it's okay to do, and this can actually save you a lot of money potentially by identifying some errors on there. Now, we talked about reports. I want to talk to you about credit scores, right? And the ranges. This is a 3-digit number that is calculated rather, excuse me, using information from your credit report. So all that payment history, your addresses, everything, that is going to impact your credit score. And a lot of people ask, well, how do I know if my credit score is good or not? Well, I'm going to tell you how basically this is factored, or how this is calculated a little later on. But right now, we want to make sure that you guys know a poor credit score is going to be basically in the range of 300 to 320 to 600 rather, and 29. So from 300 to 629, there's a lot of work to do to improve that credit score, but it can be done, right? Now, a fair credit score will be a credit score from 630 to 689. That's fair, meaning that you're probably going to get that credit card application approved, but your interest rates are going to be significantly higher. A good credit score is 690 to 719. Keep up the good work. You're doing great, and your interest rates are going to be lower. Your loan application will probably be approved. Now, if your credit score is anywhere from 720 to 850, you're doing great, my friends. Keep up the good work, and continue to do what you're doing to keep that credit score high. And again, the reason why we want our credit score to be as high as possible is it will enable us to access those loans and those credit cards to build wealth and access resources now and pay for them later, so we don't deplete our personal savings. It can definitely be an asset building tool. Now, how are credit scores calculated? What are the factors that impact our credit score the most? So we talked about the importance of paying on time. You do not want to be missing payments like I did and so many of us did, because this represents 35% of your credit score. Your total credit score is going to be your on-time payments. Are you able to pay your debt on time? Are you a reliable borrower, right? The amount of debt that you owe represents 30% of your credit score. So that's another important number. You don't want to have a lot of debt out there because it's going to decrease your credit score. Length of credit history, which is why so many of our younger students kind of struggle to have higher credit score, represents 15% of our credit score. And then the remaining 20 is split between new credit and credit mix. It's important, but it's not going to have that much of an impact in your overall credit score. The 3 main things that you really want to focus on are payment history, the amount owed, and the length of credit. So one of the things that I tell people when they realize they have too many lines of credit open and too many credit cards, you want to close one, close the one that you opened the most recently. Okay, keep the one that you've had for the past 20 years, keep that one open, pay your bills on time on that one as much as you can, even if you're not getting points. And I know that's difficult because there's so many, they're tempting us with so many gimmicks now. You get airline points or dining out points or God only knows what other kinds of points. But it's hard to resist applying because you're calculating and you're trying, oh my God, I could get this vacation, I could get that. Let's be super, super savvy and make decisions that will impact our financial future, not only now for the better, but long term for the better. So keep the longest credit card that you've had open. If you want to increase that line of credit, you can do that as well. Get in touch with your credit card company and make that happen. But definitely keep that credit card open. If you want to close the ones that we just opened recently. Another thing that I don't mention here is the importance of not applying, in my opinion, to credit cards where you have to pay an annual fee. I don't see the reason why anybody has to do that. I know, again, there's a lot of offers out there with credit card offering you 50,000 miles and whatnot. But if I have to pay to borrow money, I feel like I'm not getting a good deal. So whenever possible, avoid that unless the perks are outweighing, the cost overall. Now, I want to talk to you about the impact of having a high credit score. And this is like a positive outlook, right? When banks and lenders give you lower interest rates when you're accessing the credit cards and you're accessing the lines of credit and the loans, that's what a high credit score can give you. Employers are going to tell you, hey, you got the job. Why? Because employers are checking your credit report and your credit scores as part of your employee application. If they see that you have a reputation for paying on time, they're going to see that you're a responsible person. That's going to be a big factor in determining whether you get the job or not. Landlords are going to approve your lease application, right? Because again, you don't pose as much of a significant risk for them to lend you that apartment. They're going to be like, oh, this person can pay on time. So that's going to be an easy yes for landlords if you're applying for an apartment. And then utility companies, you don't have to pay a security deposit to establish utility service. So again, having a higher credit score can really kind of just save us money. It's a good thing to do. It's gonna impact our financial success and help us achieve our financial goals. Now, I have the great Donna O'Connor here. She's going to lead this conversation because she is a financial coach and counselor, and she has so much more experience than I do on how to have these financial conversations regarding credit with the youth and the community members that we serve. Donna, take it away, please.
Thank you so much. And this is the thing that I think is probably the most impactful for you all in the work that you're doing. And as I've been reading through the chat, what's very cool is that everybody's has their own experiences with credit, right? You're all sharing both your positive and negative experiences. And I had a lender close my credit card and I didn't ask them to. And what's the you're in this too, right? You have information and experience. And I think that's one of the most powerful ways when we talk to folks about credit, is sharing, obviously appropriately. I'm not asking anybody to pull out their credit report and go through that with anybody, but when we can connect and share, like, yeah, this is how I had to learn about it, or yeah, this happened to me. I think that really starts to take away a lot of judgment that or shame even about, like, I don't really know anything about this. So having these conversations, you're probably more qualified than you think, because you've been experiencing a lot of stuff over the years. So we always talk about starting with the basics, right? So don't try to overdo it and give too much information that is going to kind of go over their head, right? So you want to start with the basics. And I have a little sheet. Well, that's my next slide. I'll show it to you. It's kind of one of the ways I like to frame the conversation. Actually, you know what? If we could skip to the next slide and then I'll go back again. How does that sound? So this is pretty basic, right? And this is usually how I start my credit classes. And it's trying to kind of get a sense of this framework for our credit. And so I always start kind of with this image of a funnel, right? And all the credit activity, information, history, right? All of that is collected by companies, right? Who share that information with Experian, Equifax, and TransUnion. Those are the three main credit reporting companies, right? There are more than that, but those are the three main ones. So all that information kind of gets put into a funnel. This is like how I like to frame this. Some of that information may be positive. Some of that information may be negative, but it's kind of gathered and then collected on what we would call our credit reports, right? So that makes it easier to read. All the information is kind of there in a summary format. Now, here's the thing. That information is not reviewed by a person, right? No, there's no one sitting there going through everybody's information and calculating a credit score. Credit scores are calculated using algorithms, mathematical formulas, and there are hundreds of them, which is why we have close to 100 different credit scores, right? So what happens is all that activity gets onto your credit report, and then based on this mathematical formula, a 3-digit number is provided. That's the credit system. That's usually how I start with folks, just so that they kind of understand how information is flowing. When people understand how this works, or and know how information is gets onto a credit report and whether it's positive or negative, that starts to empower them to make financial decisions with information, right? Because I don't know, again, I learned a lot of this stuff just by making mistakes early on in my life. And had I known certain things would impact my credit, well, I probably would have made a little bit of a different decision. So starting kind of with these basics is kind of where I always go. Okay, if we wouldn't mind jumping back to the previous slide, thanks. And I also frame this as a game. This is a game that we need to teach people how to play, right? It's a serious game because it has, as Melanie said, it's got impact, right? But it's a game. So we're kind of learning the rules of the game. I'm not a particular fan of this game, but this is the system that we have right now. So sharing the basics and then sharing the benefits of the positive credit history, which is, Milady's already kind of talked about that. The thing is, when we're working with especially younger folks, and even if you're working with parents and they're trying to convey this to their kiddos, they're not quite dialed in to the impact yet. They're like, oh, okay, yeah, I kind of hear what you're saying, and I've heard about credit, but they're not connecting the dots quite yet because they haven't had to go rent an apartment yet, or they haven't had to go, do different things, right? So sharing the benefits is really important in making that connection as to why care right now. Why is this important right now? And on the flip side of that, also, what are the consequences of having either no credit history or a negative credit history, right? And so just kind of laying out that landscape and talking to them about why this is or isn't, why this is important, and focusing on positive credit habits. We all make mistakes, right? We all, look back and say, gosh, I wish I had done that a little differently, right? But focusing on all that negativity isn't necessarily going to be helpful, because it does, this is a financial coaching part of me, is like it does start to kind of make people feel ashamed or less likely to talk with people about their money, finances, credit, because then the shame element comes in. So we want to always be focusing on that positive. Yes, mistakes will happen, and that's okay. We learn from them, and then let's move forward, right? But let's not dwell in the mistakes that we've made. And then just make it fun. Tips and tricks. Like, I love, the true false, or there's lots of tools out there about how to engage in more fun, positive way in learning about credit, and really, frankly, a lot of different financial topics. And I think that lands really, really well, and it makes it more accessible to people. I have 3 adult children. I struggled with each one of them because they all have different learning styles, and they have their own money stories and their own kind of way they think about money. And it was a struggle, but if you can just find that piece that really kind of makes it fun, interesting, and unlocks this, then you've got fertile ground for really this stuff kind of taking hold, because they may not use it now, but they're going to definitely be using it at some point in the future. And that is when we want them kind of pulling on these resources and this information and being like, oh, I remember I was taught about this. And then they're in a position of making informed financial decisions at that point. So that's just kind of all I wanted to say about like having these financial conversations. And the other thing too, you don't have to be an expert, right? There are a lot of resources out there to help you kind of fact check yourself, or like, oh, you know what, I really don't know what that is. You can look it up, and it's okay to say, I don't know, let's work on that together, or let's figure that out together. So don't feel like you have to have all the answers. There's plenty of resources and support out there to help you have money conversations and the credit conversation in a way that's going to make you comfortable and also give them the information that they need.
Thank you so much, Donna. I loved everything that you shared, particularly that part about it's okay to say I don't know. There's a lot of information out there and it changes quickly. So that I'm a big fan of let's find out together, let's learn. I'm going to look here, you look there, and let's compare notes. But all the tips that you shared are so important, and it helps us feel more comfortable too, and having those conversations because even experts kind of say, hey, it changed last week. I haven't kept up. And it's so important to remove that shame, to say we all make mistakes. That is part of the learning curve. It's not a destination, it's a journey. It's going to happen. Just like I share with people, financial emergency is not an if, it's a when. It's going to happen. Let's be as prepared as we can be to face those things that will happen because it's a part of life by equipping ourselves with the information and the tools and resources that we have at our disposal and learn about others that we don't yet know about. Now, I want to just kind of give a brief key takeaways, revisit what this webinar hopefully you took away from. The importance of building those positive financial habits. It extends into credit, of course. You want to be able to pay for things on time, whether that's a loan that your friend gave you or a family member. You want to pay on time and maybe give them an extra $10 just to say thanks because you spotted me when I couldn't do it. And you do that with credit cards as well. You do that with lending institutions as well. You're going to have to pay that amount and then some in interest. Is that the importance of establishing a credit file and growing your credit score by establishing that credit history, not being too afraid to take that financial step and open that line of credit and use it wisely, right? Paying on time, avoid paying only minimum payments, pay in full as much as you can. Remember, 30% or less always of your full credit line to maintain a positive credit score. And the whole point of this, it's going to help us build wealth and achieve our financial goals. Those are the reasons why we want to have these conversations and hopefully equip you to feel more confident in approaching these topics with the out of school youth that you work with that are already working and managing their resources and helping their family members also manage their resource. Now, I want to remind you after this webinar, I'm going to be sending out a survey. Please, please, please fill out the survey. I want to hear from you. I want to hear what you want to hear more about. I want to hear what you think went well, what you want me to improve upon. I want to hear your thoughts. They help me become a better presenter and bring you information that is relevant to the students and communities that you serve. So that survey is going to go out tomorrow. Again, please, please, please. It's brief. I think I took out 2 of the questions from the survey, so it shouldn't take more than maybe 1 minute to fill out the whole thing. Now, I want to take this opportunity, first of all, to thank Donna O'Connor for her time today, for lending her expertise for this webinar. I also want to ask you guys to participate in our upcoming webinar. That's going to be next Monday. I'm not going to make you wait for that one. So next Monday, February 3rd, from 2 to 3 o'clock, we're going to be discussing the topic of scams targeting migratory youth and communities. If you could join us, I would love that. And I also want to open the door to questions. If you guys have any questions for me or Donna, I would love to hear from you. And you can put your questions in the chat, or you can unmute yourself, whatever feels more comfortable for you. Thank you so much, Armando, Oscar. Thank you, Tanya. It seems like we don't have any questions. I hope that means that we did a good job today, Donna, at discussing the topic of credit. I'm so appreciative to all of you for your time, taking time out of your busy schedule on a Monday afternoon to join this webinar. I am very, very grateful. Thank you, thank you, thank you so much. And I hope to see you all next week. Maria.